Good afternoon, folks. My name is Ryan Gonzales with Becker Properties, and I'm here with Carlos Cruz, Mortgage Capital. And today we wanted to talk about some of the top questions you want to ask your loan officer or your broker. And so there's a ton of questions out there that people already have, but when you start asking one question, there seems to be about 5 more questions you need to ask because you can go down a rabbit hole with mortgages and different types and different options. We were just talking about how many lenders you work with, being a broker. So, what are some most common questions you get when you first talk to a buyer? What are their most concerns? Because I have a couple, but I want to hear from you.
So it really depends on the type of buyer, right? So if it's somebody that's a first-time buyer, many people are doing internet research, which is sometimes accurate and sometimes misleading. So they'll ask questions that allow me to kind of fill in the blanks. So to answer that, they might say, hey, I want to buy a home. This is what I want. And so I'll ask them, tell me why you want an FHA loan. Tell me why you want a conventional loan. Because I want to understand what their point of view is. And I want to listen to what they're saying and try and get a very clear picture of what their needs are. So what we'll typically do is we'll ask them, is it that you're focused on your payment? And randomly I'll get some people that just say, hey, I want the lowest interest rate. Okay, there's a cost behind that because everybody's rate is typically dictated by their credit score. So when you ask somebody, I want to buy a house and what can I get and what should I do? I think it's really a good conversation to ask, what are they expecting? Are they expecting a quick and easy close? Are they expecting minimal closing costs? So what a really good broker should do is probably give you 3 scenarios. So once I've had this conversation with you of what your goals are, then I'm going to give you 3 scenarios. One that might be the cheapest in closing costs, which might have a higher payment and a higher interest rate. I can give you a different scenario, which is the highest closing costs that are allowed that are going to give you the cheapest payment. And then we'll give you something that we recommend in the middle. It may not make sense to buy your rate down and spend $6,000, $7,000, $9,000 to do that. It may make more sense to just spend 1%, and maybe it's a $2,000 or $3,000 buy down. And that way you're getting a good rate and healthy payment. And then when rates do come down, we can do the analytics to decide whether or not it makes more sense to refinance then. One of the things about the refinance market is a lot of buyers will get into a home. They're going to get, hey, they're excited, they're happy, they get this rate that's 7, 7.5, maybe even 8. And what they don't realize is some of these lenders are doing that because they know that the minute that rate moves down half a point, they're going to be circling like little sharks and piranhas, offering to save them money again, knowing that all these other fees really don't make sense. It would behoove them maybe to have bought down that rate in the beginning, right?
Yep.
And then when rates make a significant move, then refinance. So to answer the question, what do I hear the most? I get a lot of random questions. What's the best rate? I want to buy a house. I don't know how to do it. Or I heard that my parents said I have to put 20% down. I still hear that a lot.
Yep.
There's a lot, like I said, there's just a lot of misinformation. So I really think it really entails a conversation between your lender and you and knowing the goals.
Yeah, deep conversation, right? Because you can go down a rabbit hole just with the rate conversation and how the buy down works and if it's worth it. A lot of people don't understand that break-even point and if it's worth it, how long do they depend on staying in the home. Because the average person will stay in the home anywhere from 7 to 10 years now, but they may be in a situation where, you know, they get a raise or they have to relocate for work to where it's going to force them to sell sooner than they want to, or they start growing a family sooner than they
I got a question for you. Let's pretend that you wanted to buy a home and somebody says, hey, I can give you that. I can do that loan. Nobody else can do that loan, but it's going to be a 9.5% rate. What would you say?
Hell no.
Okay. But what if your goal is to pay off the house in 6 months because you don't care?
True.
So it's either rent for 6 months at $8,000 a month, or buy, take a horrible rate, knowing that you're going to pay it off in 6 months.
I have a situation kind of like that.
Which is why I'm trying to say everything is unique to that person's situation.
Everything can be relevant.
Right.
Yeah, for sure. There was a seller that I was representing, and we were doing owner financing and offering owner financing because it was a difficult situation to sell that house, needed to get at it fast. We were trying to open it up to more buyers. Well, there's Mexican International and ended up buying the house from us, and he didn't care about the rate that we were wanting for the owner financing because he planned to pay off the house in about a year. And so, yeah, to his point, I mean, he's got, we got him at a 9% rate, or might be a little higher than that. I forgot, 9 or 10%, but he didn't care about it.
I just did a foreign national prequal, 8.5. And it's amazing. It's an amazing product. So what it is some lenders will allow this as long as that buyer has a visa. And what they'll do is we'll get a CPA letter from their CPA in Mexico or whatever country they're coming from that says this buyer has this much money, this buyer can afford this much payment, this buyer has this debts, and then it's just a letter, and we will close the loan.
That's awesome right there.
It allows a person to buy a home. I'm working with this buyer right now. He's relocating his family. He's already got his visa. He's already got his green card. He's ready to move, but he doesn't have taxes filed yet. He hasn't moved any of his money over. His money is in different countries. So are we saying that this man shouldn't buy a home when he can legally live here and afford to? That makes no sense. So we got him a deal, great rate. He was happy. I mean, it's just a matter of knowing who to go to ask the right questions.
Mm-hmm. Definitely. Yeah, I have a buyer that I just got referred to me. I've worked with her brother in the past, and he referred her over to me. She was talking to a lender, and I didn't know she was talking to a lender. I figured she was talking to somebody. She obviously talked to her brother about it. Her brother referred her to me. Well, when I talked to her, she had already talked to this lender, and I started asking questions about type of loan and down payment and what their scores were. And she's like, yeah, he had to add my son to the loan. He said something about credit, and I was like, well, typically when you add somebody to the loan, it's more for the income factor, probably to approve you for a higher amount. And she's like, oh, okay. And then I started asking more questions, like lender questions to her, just to kind of fill her out. I was like, can I get the contact for the lender and talk to him directly? That way, we kind of speak the same language, so that way I can better understand your situation and see maybe if you qualify for down payment assistance or whatnot, because she was telling me she didn't have a whole lot for down payment. And she said, well, how do you know he's a lender? And I was like, well, he's asking all these same questions I'm asking, right? And she's like, yeah. I was like, yeah, he's definitely a lender. Realtors don't ask those type of questions.
Right.
So then I called him. Turns out I know the guy.
Oh, that's cool.
Yeah. I hadn't worked with him in the past, but a couple of coworkers worked with him in the past, so I knew who he was. And we started, just talking about everything. Turns out he has a down payment assistance program, but it's an internal program because she only has like a 610, I think, credit score. And a lot of those down payment programs are like
620.
620.
Yeah.
So he has this internal program that's going to give him 5% down. It's at a high rate.
Yeah, 8.5.
8.25.
Okay.
It's going to give her 5% towards her down payment, closing costs. So we might end up going that route, but
that's not a bad deal. It gets her in a home instead of renting.
Yeah, and so the way this one works is that down payment money is actually a second lien, which you can finance it for like 10, 15 years or something like that. So it's an extra payment they're gonna have to make a month, but they don't have to put up all the money up front. And so for anybody that has like their savings, like she has a little bit in 401k, she could probably.
Well, you don't want to wipe somebody out either, right?
Yeah.
I mean, that's horrible.
That's what.
Could you imagine owning a home and you spent all your money to get in there, and now your water heater broke?
Yeah, good point.
It happens.
Everybody wants to have a nest egg, so that makes
Right.
sense. We might go in that route, but yeah, I just thought it was an interesting conversation because that's one reason why I want to learn so much about loans and the process and stuff like that, and be able to speak that language so I can ask those type of questions. And automatically now the buyer's going to feel a little more comfortable with me that I know a little bit more about the mortgage side and what she's actually getting into. So I wanted to ask you, how many realtors do you know that are asking those type of questions or know that much about the mortgage process? Because you work with all different types of realtors.
Most of the realtors I work with are very experienced in the business, which means that they've got a very good knowledge base of mortgage lending. And it's really important because it's allowed them to save certain deals that would have blown up. A friend of mine just had a deal a little over I think we talked about it last time, 1.1 million, and the appraisal came in 200 grand light.
Oh man.
I mean, nobody makes a $200,000 mistake, but the appraiser not only refused to reconsider value, then sat on it for another 7 days before he just said, "Oh no, it's the same value."
Dude, that same exact thing happened to me.
Misquoted the size of the garage. Just did a lazy job. It was really bad, and both the buyer and the seller were willing to use another lender because then we could order a new appraisal.
Mm-hmm.
And again, if that second appraisal came in at the same number, great. Now we know it's really true. But what were the odds that it would probably come in higher?
That's a big gap.
Well, then an emergency happened, and the seller needed to sell the house in like a week. They're like, no, we don't have time to move. We don't have time to start with a new lender and wait 30 days. So the buyer ended up having to liquidate some of their 401k money.
Wow.
Just to come up with the difference to cover the purchase.
So they did cover the 200,000?
Yeah. Well, 150.
They were, yeah.
Yeah, but they still covered some of it. But I mean, at the end of the day, it's still a lot of money to wipe out of your 401k.
Yeah, because the buyer, I'm sure the buyer's agent,
everybody was angry.
Everybody was like so confused by that appraisal, right?
I don't even understand. I had one just recently. We were so excited. We had the loan approval. It was a refinance. We were taking him out of this nasty mortgage company that I was at before, taking him, putting him into a better loan. The rate was going to be almost 2 points cheaper, and it was going to save them $300 a month. Plus, they were going to get their 2 mortgage payments skipped. Plus, they were going to get their old mortgage, their old escrow account balance checked back. They would have rebuilt an entire nest egg. Appraiser killed the deal. Came in 20 grand light on the appraisal.
Damn.
Yeah. And I felt so bad for the family. I ended up reimbursing them for the appraisal. Out of my pocket.
Speaking of the appraisers, I mean, we're seeing more and more of that, right? Appraisers are being a little bit more conservative with their estimates.
It's happening more frequently. And it's not just happening in San Antonio. I'm seeing it in East Texas. I'm seeing it in Houston. I'm seeing it in Austin. It's coming in more frequent. I get their point of view that if comps or recent sales are lower, they have to make those necessary adjustments to adjust value. Part of me wonders why we have so much inconsistency with appraisals. I mean, I've seen 3 different appraisals in a matter of a couple weeks that make no sense. Make no sense.
That's the thing, man. They're so subjective. So you could have 3 different appraisers, and they're all going to be different values.
It's frustrating. I was talking to a realtor the other day, and she said she was really angry. She says, how did this happen? How is it that we have no leverage? And I said, well, it happened after the Dodd-Frank. I said, in those days, you could, if you were a listing agent and that house didn't appraise, you'd get 3 more appraisers until you got the number that you wanted. If you were a lender, you'd beat up the appraiser and say, hey, I'm not going to use you again unless you give me a number. So there was a lot of manipulation in the industry, and which is why Congress said enough is enough. And now lenders we have no legal contact with the appraiser, which has swung the pendulum in the other direction. And now you have appraisers that have no accountability or very little accountability. Nobody knows how to file a complaint. Nobody knows how to get rid of them. Nobody knows how to hold them accountable.
There's supposed to be a second pair of eyes, right? Examining each appraiser.
There is. So they'll submit it to their company and they'll review it. But
who knows how?
I don't know. I can't criticize it.
Yeah.
I can't beat them up for something I don't know enough about. I do know that there is a lot of frustration. And, it was happening during COVID when houses were underappraising because now people were overbidding. It's happening now when it's a seller's market. Appraisers, I think, are maybe a little more reluctant to add certain values, knowing that they think that these houses might sit on the market longer. So
Well,
It's just really hard to say blame belongs on just them.
yeah, you know what's unfair too is people that are actually doing upgrades to their house, building costs have gone up, right?
Right.
Materials, labor, everything. So the people that are actually putting money into their house, sometimes the appraiser's not even giving them the right value too, when it costs more today than it did, when they first started.
It's frustrating because if you do certain upgrades, I had to put a metal fence up on my property. Am I going to get the actual cost back for it? No.
Nope.
So, but I put really nice countertops. I'm probably going to make money on that. So It's just a lot of balance.
Mm-hmm.
If you're going to do upgrades, talk to your realtor and find out which ones make sense. Does it make more sense to finish your bathroom out and do it nicely? Or does it make more sense to put shelving in your garage?
Yeah.
So, again, that's where your realtor is going to be able to give you an educated answer because they see more properties than we do.
Mm-hmm.
Let me ask you a question. With the buyers and the sellers that you're dealing with today and the conversations you're getting from friends and your network, what are you hearing they're asking about? Are they asking, hey, what are rates at? Are they asking, what can I afford to buy? Or are they asking, oh, shit, I'm just going to just start renting? What are they saying and hearing and doing?
There's so many people that just don't know about how to buy a house still. Even if they're second-time buyers, like maybe they bought through a builder the first time and they didn't have a realtor. They just had a sales rep helping them through everything.
Yeah.
New construction purchasing is a little bit different than pre-existing purchasing. So a lot of people that I talk to and that I work with, I'm selling more pre-existing homes right now. Down payment, still a question, right? Is there down payment programs? What does my credit need to be? All the same questions that you pretty much laid out. And this kind of brings it to my next point I wanted to ask you. Are you seeing it being more difficult for buyers to buy right now or less difficult since the last couple of years?
Emotionally, for buyers, it's emotionally more difficult to buy because of all the fear that you hear in the news, the fear of a recession coming, the fear of high rates. Oh my God, the banks aren't doing anything. Oh, the Fed hasn't done anything. There's a lot of fear. There's a lot of negative talk. So overcoming that is really job one.
Yeah. After
After that, I think it's actually a really great time to buy because you have sellers paying all of your closing costs in many cases. I was talking to somebody the other day and I said, look, if you wanted to buy a $300,000 house today, or you wanted to wait 1 year, what would the difference be? Let's just pretend you knew that in 1 year the rate was going to be 1% lower. Well, right now, a $300,000 house probably has about $9,000 in closing costs. And right now, sellers are probably are willing to chip in for that and pay for it.
Yep.
Okay, so that's $9,000 you saved. Well, you still have to rent. So let's say you have cheap rent for $1,500 a month for a year. Well, there's $18,000 you didn't have to pay. So now you've saved $27,000 by buying now. Oh wait, what are you going to save on a 1% lower payment? $150. So you spent $27,000 to wait to save $150.
Yeah.
There's zero logic in that. And that's what I talk about is understanding that being a buyer in a seller's market really is a lot of leverage and a lot of savings. This young lady that I just closed on yesterday that we're going to celebrate today in Austin, she's getting she got $15,000 from the seller. Not only did we have enough money to cover all of her closing costs, we actually had leftover money that we could use to buy down the rate.
Oh, that's awesome. Yeah.
So buying now makes more sense than waiting. It just does.
Yeah, I tell every seller I work with right now, if we go on the market, most likely they're going to be asking for closing costs, and not just half of it, probably all of it. And depending on how we're priced and depending on the market in the area, we can always negotiate that, but that's more and more becoming common. Buyers are asking for it right now, and a lot of sellers are end up giving it away. And so most deals that I'm doing with on the buyer side, we're getting all the closing costs and even a reduction on price unless there's multiple offers like that one that I'd help those buyers buy. that was a different situation because there was ended up being 4 offers. So we couldn't ask for closing costs on that one because we wanted to win the deal.
But what I'm hearing is interesting. Price point. Houses that are under 400,000, you're seeing sellers really lean in.
Mm-hmm.
Houses above 500, 600,000, I am not seeing a lot of sellers lean in.
It's interesting, right?
It's bizarre because you would have thought that those savvier, wealthier, higher income earners would demand more, but it seems like there's a pretty aggressive market right now for those homes.
There really is. Yeah, you can see it increasing.
But it's also people moving to Texas
I think
still.
it's more people moving to Texas.
Yeah.
I think that's exactly what it is.
Because their income over there and their wealth over there is much bigger when it comes to here.
Where's that couple moving from? Is it Georgia?
Miami or no?
Atlanta, right?
No, from Florida.
They're moving from Florida? Okay.
Yeah.
Yeah, so I mean, if you're talking about Florida.
Well, Miami income too.
Yeah.
It's significantly different.
Yeah. Or, California. We got a ton of people moving from all over. And so buying here, I mean, is still really affordable if you're looking at the nation, looking at the averages. I think the average in the nation's around $450, but ours is still around $350 for the state.
Interesting though, I've got a couple buyers that have been really struggling because they want to buy a home under $200,000. And that's a very affordable payment. That's $1,600 bucks.
Mm-hmm.
They're there. And there's some nice houses. But it's that statement, location, right? Location matters. You want to live next to the grocery store, next to the freeway, in the nicest neighborhood with the lowest crime rate, blah, blah, blah. Yeah, you're going to pay more. When we bought our first house, I'm going to say it again, I got approved for $400,000, and that was 20 years ago. My wife said no. We bought an $80,000 house because we could afford it. We knew that we could afford it. We knew that there wasn't, was it in the best neighborhood? No. Was it in a bad neighborhood? No. Were there things that needed to be fixed up? Hell yes. It had some ugly brown 1979 carpet in there, but it was worth it because that sweat equity brought us a lot of value when we ended up selling the home 7 years later. We made 50% profit on that.
So, yeah, there's a couple of different buyers out there, right? When you start looking at houses with buyers, a lot of them do want, I would say 70% of them, maybe 80% of them want the house move-in ready as possible with upgrades. Like it's all the bells and whistles. You want the new shiny car, right? There are some buyers that can actually really see past some of the outdated stuff, some of the builder grade stuff, or the house as a whole needs updating because it was built in the 70s and they haven't really changed anything, but it has good bones, and it's in a really nice neighborhood with nice mature trees and nice landscaping out front. Like there's some people that have just taken care of their house really well and just needs a little bit of TLC.
Or the houses were built well.
Mm-hmm.
They're built differently.
Built a lot different, bigger lots too.
My mom's home, even though it's in a very humid climate here in San Antonio, and in the area that she bought, there's a lot of soil movement, so that the foundation moves a lot. The irony is, we've never had termites, and my mom has never sprayed for termites. But all of the exterior and interior studs are cedar.
Oh, nice.
Who does houses with cedar anymore?
Nah, nobody.
Nobody does.
Mm-hmm.
The interior and exterior walls the studs are 16 on center.
Yeah.
What's the building code? 22?
I think it's
for an interior?
24 now.
24? That means less material, less structural rigidity. The houses are built differently. And so I remember we had looked at a house. Do you know where Inspiration Hill is?
Mm-hmm.
Okay, we had looked
right in that area.
Yeah. We looked at a house on top of the hill. It had an entire view of downtown San Antonio.
Oh, that's nice.
It was gorgeous, and it was a narrow lot, weird shape, but it was 2-story. So you would drive in, park, you'd go upstairs, and the house was on that second level, or the living area, and giant windows. It was gorgeous. Now it had 1978 brass everywhere. Mm-hmm. It had orange shag carpet. It was nasty.
The shag.
But I thought, a little bit of time and a little bit of energy and a little bit of work, one project at a time, one room at a time.
Yeah.
Man, that was. I mean, we regret not buying it.
It's not for everybody, but if you can slowly do the upgrades yourself throughout the years you've lived in it, and then 10 years goes by in a blink of an eye, and now your house is worth double, what you pay for it. It really, I mean, you're really happy and proud of yourself for doing that.
I talked to a family that ended up doing that, and they qualified for a little bit more than what they ended up buying. But with the money they saved and the payment they saved, they said, hey, look, we can actually fix this house up the way we want it. And so the husband said, well, yeah, it's great because now I don't have money to go out. I have money to fix up my house. And so they stayed home. Well, I talked to him recently. They had 2 more kids because he was like, well, I stayed home a lot more.
Yep. So the family grew.
Yeah, so the family grew. It's just, and it's kind of good. It's a good story because they're walking away. They're going to sell their house. They're going to make a lot of money. And they didn't buy it for a lot of money.
That couple we just helped not too long ago buy in Natalia.
Yeah.
Where you did that type of loan for them that can be recasted.
Right.
They just ended up selling their house. So they closed on their original house.
Yeah.
They made a boatload of money on that house because they slowly upgraded throughout the years. They had been there for, I think, 7-8 years. So we did really good. And that was one of the clients that I had put a little money into the house before we listed it. And they trusted me. They were on board.
I remember that.
We talked about the upgrades. They ended up putting in about 10. And we probably made like 30 more than we would have if we tried to sell it as is.
Wow.
So it's not a bad return on that type of money. And now I don't know if they're going to recast or whatnot, but their story is interesting because we couldn't sell it the first time, and we had it priced lower. This was a couple years back, but they also had a lot of debt, so they weren't in a really good position to buy. So that the next 2 years they really focused on paying down the debt, and that's how they were able to buy this new house without selling this old house first. And then they had more money to put into the old house. And it just ended up making more money overall. It was a great story. When
somebody takes the time to recognize that maybe they don't know the right way to go or the right path, but they know where they want to go. They just don't know how to get there. It's really cool when they have that humility to say, hey, let me talk to the realtor. Let me get his advice.
Yeah.
Let me talk to the lender. And let me put that mission to get to that finish line, and then they do it. I mean, my favorite story is I worked with a family for 2 years to help them build credit, fix their credit. The wife, she didn't play around. She opened a separate bank account. The husband gave her his paycheck on Friday. She put it in the separate account. They didn't have a debit card. They couldn't touch any of it. They actually had to go to the bank and both sign if they wanted to withdraw money.
Wow.
Yeah, she gave him lunch sandwiches every day. I mean, it was a mission.
They did it.
They not only paid off all their debt, they got into their home. They have 700 credit scores now, and they still call me, and it's been 10 years.
Wow.
They'll still call me every year on their anniversary, say thank you.
That couple I probably started working with 3 years ago. And for the first year, we're just trying to figure out certain things with their credit and their debt and the price point of their house. And it was a bunch of conversation. I probably met with them probably 5 times one-on-one, talking about a lot of the same stuff, but we had a goal in mind on what they needed to do. And I had connected them with another realtor or another lender in the very beginning when we first started the process. But then when we came closer to it, I started talking to you about the recasting and that whole scenario. And I mean, that ended up working better out for them in the long run. And it's crazy, man. Like, because those years went by fast. But
yeah.
But I mean, they had a goal. They had a goal. We set out a plan
and look at the house that you put them in now.
Yeah.
I mean, that sucker is amazing, and all that land that they got.
Yeah.
Was it 5 acres?
I think they were on 2.
Two. Okay.
Acres. Yeah. They're happy. They're really, really happy, and they, like you said, they follow the game plan. And think about how fast the years go by, right?
Well, look, it's already June. Mm-hmm. I mean, I'm sorry, but wasn't it Christmas a couple months ago? And it's June now. So, yeah, I mean, talking about the time moving quickly, one of the things that I think you and I keep talking about is where are rates going. I had a young lady yesterday call me and she wanted to apply, and she said that she's been shopping lenders. She's already applied at 3 different lenders. She was very specific. She said, I don't want any of you to pull a full credit report, a hard pull. I'm only giving you permission to do what's called a soft pull. Mm-hmm. And tell me what you can qualify me for. Well, one lender had her spend all of her savings, this was a year ago, spend all of her savings to pay off all their debt. They didn't need to.
That's crazy.
They make enough money to buy. But he has really bad rates.
So he needed that.
He needed them to have less debt so that he could keep the deal. It wasn't for them. It was for him.
Damn.
So we've been talking, and I said, look, go look at a couple other lenders. Go look at a builder lender. Go look at a couple new homes. I said, you got to do what's best for your family. I said, a builder might give you $20,000, $30,000 and offer you an 8% rate, or they might give you $15,000 and offer you a 3.99 rate. I said, you just don't know. I said, it's worth looking.
Yeah.
I said, but when it comes to being able to buy a home, I said, I can give you a loan right now for $300,000 to $400,000. You're good.
How did they get connected with you?
I don't know. She said she was at an open house and somebody said, call Carlos, but she doesn't know who it was.
Oh, interesting.
So it was kind of cool.
That's awesome.
Yeah. I mean, I wish I could say thank you to whoever it was.
Yeah.
But it's been fun. Yeah.
Somebody knows your name.
Hopefully. Hopefully more than just one or two
yeah,
people.
You've been getting out there, though. You've been helping a lot of people and connecting with a lot of realtors. Probably all those networking events you go to, man.
I got another one. Well, like I said, we're doing this event for my first-time buyer in Austin. We're taking her and her family and her friends. And instead of trying to do an event with an open house and invading her space when she's trying to move in, what we're doing is something with her friends and her family and the realtor that helped, and just do, a breaking bread and saying thank you and sharing maybe some of the stories, some of the things that are relevant. And it's interesting. She was saying that some of her friends wanted to buy a home, but they didn't even know where to start.
Yeah.
But that's not why I'm doing it. I'm doing it because it's a chance for her to celebrate buying her first home. I mean, that's a big deal.
Yeah, it is.
A single person buying a home, it's impressive.
Yeah, it's going to come back to you tenfold too. Just being really good to her and explaining all this stuff to her like you usually do. She's definitely going to refer you to people. So that'd be good.
Yeah, it's going to be fun.
Tap it in the Austin market, man. That's good.
It's been busy. I mean, Austin is weird in the sense that, well, yeah, Austin is always weird, but Austin is also weird in the sense that the housing has actually seen a little bit of a shift in pricing. Mm-hmm. But then we go back to those more expensive houses, those $600,000, $700,000, $800,000. You're really not seeing a lot of movement. They're not having to chip in so much. They're still selling. This market is kind of crazy right now. If I got one advice for anybody, it's be open-minded to what your options are of where and what you could buy, because you're going to find different value propositions in different price points.
Yeah. I think that people are they're real scared about buying right now too, and sitting on the sideline just because they don't know what's going to happen with the rates in general. And it's been like that for a couple of years now. And then there's other people that are actually seeing that this market's kind of normalizing, and they can get better deals. So I think the more that we just educate them and tell them, what's really going on right now, I think they need more to hear this more to be able to buy right now.
I mean, if rates are low and there's more buyers in the market, then sellers don't need to give away as much money.
Yeah.
And you're going to save $100, $200, $300 a month.
It's not worth it.
But you're losing out on the $8,000, $10,000, or $15,000 that you would have gotten up front.
Yeah.
I mean, just do the math. I mean, even if you only save $10,000 and you're lowered your payment by $150 by waiting, well, what is that? $1,800 a year? It's going to take you 5 years to get your money back?
Yeah, not worth it.
No, not at all.
Yeah, if you can buy right now, I mean, you're getting the best deal.
Look, there's down payment assistance. The rates aren't bad. They're not great, but they're not bad. You know, if it's a matter of working with somebody to improve your credit score because somebody said you had bad credit, call me.
Yeah.
Because I can help you. This gentleman that I'm working with from Mexico, we sat down, we spent an hour, we built a plan for not only him, but his wife and his kids so that they will have optimal credit scores.
Yeah, you have the credit analyzer that you use, right?
Well, it also helps that I spent 23 years in collection agencies managing credit reports and credit data and all of that mess.
So, yeah, you're able to really kind of predict what will happen if you do something.
I can give a lot of guidance that's accurate.
Yeah, that's awesome. The other lender that I was talking to with that buyer that had the lower score below 620, we were talking about the credit analyzer, and they just didn't have a lot of credit, and there wasn't like a whole bunch to do to get her up to the 620 score. So that's why he looked into that internal down payment assistance program. Do you have something like that?
We do. But let me ask you a question. Does he know about optoutprescreen.com?
We didn't talk about it. So I don't know.
He probably doesn't. So a lot of people don't know what it is. Optoutprescreen.com is free. It's free. It is a website that I think every single person should use. Why? The minute you go in there and you log in and you provide your personal data, you select the option for free, and I think it's for 5 years, your credit is locked. And what's cool is that means the credit bureaus cannot sell your data, which is what they do.
Yeah.
I mean, we don't know who they're selling to. And so now by locking it up, your mail, all that trash and junk mail
Offers
goes away. Your mailbox gets real thin and real nice. You actually get real mail now, not all that junk. So the really interesting thing, though, that we've seen is that for some people, when they do this, we'll see their credit score go up 10, 15 points in about 2 weeks.
That's awesome.
So there's a lot of little things we can do. And, you know, a lot of people that only know how to use the credit analyzer just haven't been in the business long enough to understand that there's other ways of working with credit and debt to improve a score.
Yeah.
I mean, again, it helps being the old guy in the room.
We could talk for hours probably about credit and all that.
How to manipulate it and move it. And yeah.
Yeah, we got to do that someday for sure. I'm sure the people would like that.
Yeah, there's some funny things. I mean, I had one lady, she had no credit. She was truly a blank. And her family said, oh, you need to live off cash. You don't want credit. Well, you kind of need credit.
Yeah.
It is what it is. So what we did was we had her go out and get one secure credit card, $500, and she put, I think, 20% on it. That was $100, and then she left it there for the whole month. So then next month, I told her, call me when your bill shows up in your mail. She called me, and her credit score was 720.
That's crazy.
So help me understand how that makes sense. It makes no sense.
Sense.
Most people don't know those little things. There's tricks. So, but in lending, you typically need 3 trade lines to buy a home.
Oh, do you?
So what did we do? What's called non-traditional credit. I didn't make her go get 2 more credit cards and go buy a car. That's just dumb. No, we used her electricity bill and her water bill. We added it to her credit bureau. We show proof that she pays them on time, and we were able to put her in a home.
I didn't know you can do that.
Oh, yeah.
You can do that with rent, right, too?
Yeah, there's a lot of things you can do.
Yeah.
A lot of people don't realize how powerful rent history is. So when a lender runs a loan, they have the option to check positive rent history. Well,
oh, nice.
When you do that, especially for a first-time home buyer, or especially with somebody that's got some challenges to their credit score, it adds a lot of value to their risk profile. So when we run the loan through what's called an automated underwriting system, that is simply just measuring your layer of risk. Okay, it's just Ryan buying a home, not a second person. Okay, well, there's risk now. Ryan's got a credit score below 680. Oh, there's a lot more risk now. Ryan only has credit that's been out there for 2 years. Ooh, there's another more layer of risk.
Mm-hmm.
And so it's measuring all those layers. Oh, Ryan Ryan has 2 years worth of money in reserves in his 401k. Ooh, now the risk goes down again. And it's measuring all of that. Think of like a little scale. And when it's done, it says you're either approve eligible, which means you're a slam dunk, or it's going to give you what's called a refer eligible, meaning that the loan is being downgraded. It thinks that there's too much risk and it wants an underwriter to manually review that entire loan. Well, here's the win. When a loan gets downgraded to a manual, there are 3 things that it's typically looking for. Number one, it requires 125% reserves, residual income. It's a formula that VA uses. But the number 2 thing that it's looking for is positive rent history. That is been the saving grace for so many buyers that I've worked with where their loan got downgraded to refer eligible.
Cool.
And the third is looking for reserves. But it's just, I mean, the little things, if you know how to do loans correctly, it's very easy to make sure that when you put somebody into a loan, and you give them the pre-qual, that you know you're going to help them close that loan without stress.
That's awesome, man. And I was just thinking about it right now, like when you said pay, like that other lender made that buyer pay down all her debt. It may not ultimately be the best thing to do, right? Pay down your debt all the way to zero. Don't you want to keep some credit revolving on the credit lines sometimes?
Yes and no, but here's what he could have done. Instead of having her pay off all 3 or 4 credit cards, why not just put them all onto one card as a debt consolidation on one card? Now she didn't have to spend. Okay, so let's say you've got 3 credit cards with 10 grand and you owe $2,500 on each. Or 4, let's say, 4 credit cards with a $10,000 limit, each one you owe $2,500.
Yeah.
Why don't you move all 3 to one card? Now your balance is 10 grand with them, but now you have 3 cards that are at 0. And you know what? Your score is going to go up because it's going to look at your usage only on one card, not all 3, not all 4.
Yeah.
So it's just, there's little ways to maneuver the system.
And don't close the accounts, right?
Oh God, no, please don't.
Yeah.
I think I've got credit cards that have been open since probably 1989, 1990.
Oh, damn.
Yeah, I've got some pretty good credit depth.
Yeah. So yeah, that'll help. So we'll have to go into a conversation with credit, man, sometime.
Well, we want to bring in your contact to talk about not only ways that we know how to fix it and work with them, but also ways that they know how to improve it. Now, there's a lot of sketchy credit repair people out there. They'll tell you they can do this, they can do that, and you know what? They write a bunch of letters, and the next month your score went up 50 points. They did their job. But all they did was file disputes. And so when you go to buy a home, all those disputes have to be resolved. Guess what? Now your credit score goes back down. So knowing who to work with in that world is really important. I've seen a lot of people waste a lot of money and get 0 results.
Yeah, I think they have like a lot of bad reps out there.
There's no accountability. There's no regulation for them.
Yeah. I think they have a lot of bad reputation, like in general, because everybody, like not everybody, but a couple buyers that I talked to that use credit repair people, like somehow it didn't work out.
There was
and they just felt like they wasted a whole bunch of money.
There was a credit repair person, I won't mention their name, but they were creating false letters and sending them to the credit bureaus.
Oh, the payoff letters?
They were sending letters that stated this debt has been paid off and the creditor is allowing the debt to be removed from their credit report, which really, that super charges their credit score instantly.
Yeah. What are those letters called?
Pay for delete.
A pay for delete letter.
So I'm going to pay this, but you're going to delete the credit.
Yeah, I've heard of those.
And
a deletion letter.
Yeah, and this credit repair person was creating their own. And HUD found out. HUD figured it out. So there's, like I said, why would you want to be the buyer that happened to?
It's crazy.
Yeah, I wouldn't want to mess with it.
And that guy probably helped a lot of people, huh? That's wild.
Yeah, that's dangerous. I mean, that's jail. That's
Yeah.
that's not jail. That's prison.
Mm-hmm.
Anyway, but there's always going to be somebody that wants to take a shortcut. So,
Yeah.
What else are you seeing?
I mean, that's pretty much it. What I wanted to talk to you about today, but we'll have to get on here and talk a little bit more about it. Just to go into depth a little bit more.
I really want to set up a time where we can bring somebody in that's truly a professional in credit repair, because it is a process.
Yeah.
It is knowing what to say in the letter. It is knowing when to reply and how to reply. There's a lot of people that don't know that you shouldn't necessarily just pay your credit card, your charge-offs or your delinquencies or your late payments, because all you're doing is extending it and validating it. So these people are experts that are really good at it. Now they're expensive, but you get what you pay for.
Yeah. It's worth it.
Yeah, it really is.
Yeah. Cool. Well, thanks for being here, Carlos, and talking a little bit about loans and scenarios and questions and stuff like that. We're going to continue to do more of this in the coming weeks, and we'll find a credit repair person to get on here. But that's all I had today.
I got to tell you, next week I'm out. I've got a conference. I'm going to visit one of the lenders. I'm taking one of the realtors that I work with. Remember, I told you that I really want you to come because it gives you a really good perspective of what all of the broker lenders can do, the wholesale lenders can do.
Oh, this is Michigan, right?
Yeah, in Detroit. Yeah. We're going to UWM. And then after that, I'm going to a mortgage conference for a few days. So I will definitely be out of pocket next week.
Okay. Well, the following week.
Yeah, we'll be back in 2 weeks.
All right, guys. Well, thanks for tuning in, and we'll see you in a couple weeks.
Bye.